Straight to business with Brian Quinn. He's starting with Donald Trump's pick for the next leader of the Federal Reserve in the hot seat. He faced a grilling from US senators.
Kevin Warsh, Stuart, is Trump's nominee for the Fed chair. He faced off with the U.S. Senate Banking Committee Tuesday as part of his confirmation hearings. Warsh under the microscope in part for his personal wealth. With a net worth of at least $135 million, he would be the richest Fed chair in history. The biggest question at Tuesday's hearings, though, centers around whether or not Warsh would yield to Donald Trump's desire to quickly cut interest rates. The president has long been pressuring current Fed Chair Jerome Powell to bring rates down towards 1% in a bid to boost U.S. economic growth. Powell's refusal to do so has seen him placed under federal investigation amid cost overruns of renovations to the Fed's D.C. headquarters. Republican Senator Tom Tillis has said he will not vote to confirm Warsh until that probe is dropped, as Congress tries to ensure the Fed's independence from presidential meddling. Analysts, meanwhile, say that Trump may live to regret his pick, as Warsh insists he is not the president's sock puppet.
Kevin Warsh is not known to be all that dovish and anxious to cut interest rates. And so we could get another case of buyer's remorse after, say, 6 months if Kevin Warsh is nominated, he's the chair, and he's not really agitating for the rate cuts that President Trump is looking for.
Checking on the markets now. How are they shaping up?
Sure, crude oil prices are trending lower Wednesday on news that Trump is extending the U.S. ceasefire with Iran. Uncertainty, though, still running high on commodities markets as Brent crude continues to trade near $98 a barrel, WTI just south of $89 a barrel. Over on the Asian stock markets, the Nikkei in Tokyo briefly hitting a record high on news of the continued ceasefire. New trade data out of Japan shows exports rising for the 7th straight month in March. Hong Kong, though, in negative territory as the ongoing blockade of the Strait of Hormuz continues to batter Asian economies. Here in Europe, markets are trending higher as investors wait on quarterly results from companies like Carrefour and L'Oreal today. New data out of the UK shows inflation there spiking to 3.3% in March over the war. The FTSE in London lagging a bit behind the CAC 40. The shares in Lufthansa are rising today. It's a German airline, says it will be cutting 20,000 flights this summer to save on fuel costs. The DAX in Frankfurt up around 0.5% at the open.
Now, next, that tenuous ceasefire between the US and Iran, holding out some hope for Iranian citizens. But meanwhile, an economy that was in bad shape is only getting worse.
Well, for years, Iran's domestic economy has been hobbled by Western sanctions. Now, though, the war launched by the U.S. and Israel has driven it into severe crisis. Businesses are facing bombed-out infrastructure and crippling internet blackouts, while consumers face soaring inflation and mounting layoffs. Caitlin Brown reports.
Every part of life in Iran is being reshaped by the conflict with the US and Israel. Since the beginning of the war, a staggering 2 million people have lost their jobs, representing over 2% of the entire population. This mass unemployment has naturally triggered a collapse in consumer spending. With paychecks vanishing and the future uncertain, sectors like tourism, restaurants and retailers have been hit the hardest. Some companies are making staff redundant with a vague promise of rehiring after the war. Others have simply forced their employees into unpaid leave. The economic pain is being exacerbated by a government-mandated internet blackout. Officially, these shutdowns are used to prevent surveillance and cyber attacks. However, the collateral damage to Iran's modern digital economy is immense.
If the negotiations happen, we will learn our fate. Now the internet is shut down. Everyone is losing their jobs. We need to know what we should do.
It is this uncertainty that has left the country's economy paralyzed. Since the war began, these blackouts have cost the economy 50 trillion rials daily, which is roughly $35 million, with total losses estimated at more than $1.8 billion. To stem the bleeding, the government has announced a loan scheme for small businesses, offering roughly $300 per worker. But any relief would be short-lived, as the loans must be repaid within 6 months, with interest rates soaring as high as 35%. This wave of unemployment comes just as official inflation passed 50% in March, a figure experts believe will only keep climbing.
And finally from Brian, the war's impact on supply chains is being felt across a wide range of industries, including some you might not expect.
One in particular, Stuart, it is apparently having significant fallout on the condom industry. Malaysian producer Carex, which supplies brands like Durex and Trojan, says it's planning to raise prices by 20 to 30% due to supply chain issues. Increased shipping costs and delays are part of that. The company also says it has seen costs for raw materials like synthetic rubber and lubricants rise due to disruption of energy and petrochemical flows from the Middle East. One bright spot, the company says demand is up 30% this year. Why is that, Stuart? We don't know. Could it be the apocalyptic nature of the state of geopolitics? People casting their inhibitions aside? We can only speculate.
Who knows? All to decipher. Brian, thanks a lot. Brian Quinn with Business of Forex 24.